And our next presenter is Ashley Lastinger, CEO of Altura Energy, a helium exploration and production company with interest in the Holbrook Basin in Arizona. This is the most recent addition to the Kin portfolio. And after my due diligence, I love the fact that it had production already, low risk growth profile, and some pretty high impact exploration upside, which I think is what a lot of small cap investors are looking for. Ashley's been a pleasure to work for and get to know. She's got a great technical background, which she'll get into. And Ashley, let's take her away.
Well, hello, everybody. Like Arlen said, my name is Ashley Lastinger, and I am the CEO of Altura. Thank you so much for taking the time to listen to some of the exciting things that we've got going on. We trade under the TSXV under ALTU, and the exciting news as of Monday, we also trade under the OTCQB under ALTUF. So let's jump in here. All right, first things first, as you know, I will be making forward-looking statements. Okay, who is Altura? Well, simply put, we are one of the very few helium producers in North America. We have a non-operated position with two existing helium wells, and we also have two wells of our own that we operate that have successfully been re-entered, and we have proven production with an additional four planned for work this year. These wells are kind of the first stepping stone into our low risk growth campaign and where we have premium upside. The current formation of interest is less than 1,000 feet, which makes them very inexpensive compared to most oil and gas wells. And the assets within our development plan are also at 100% working interest with very favorable net revenues. Our management team has a very deep operational knowledge in the energy sector, not just in exploration and production, but also in business development. And the fragility of the production of helium in the Middle East, and the impact to the global supply chain is going to be more important than ever, especially, as we continue in the coming months. And then most importantly, we're funded for production growth. So our cap right now is at 15 million. We have cash on hand to put the first steps of our development plan into reality and are very, very excited to do so. So I'm not going to bore you with my complete resume, just that I've personally been in the energy sector for almost 2 decades. I specifically am a petroleum engineer by background. I've worked from majors to private firms, heavy oil to unconventional gas, everywhere in between. And our company is also supported by Rob Johnston, who was the former EVP at Apache and the founder of Atalaya Resources. And then we also have Ian Telfer, who was the former chairman of Gold Corp, who prior to their merger in 2019. So why helium? Isn't helium just the gas that you put in a birthday balloon and makes your voice sound funny? While you would be correct, yes, I know I will not be giving a demonstration. Helium is actually the second most abundant element in the universe, and yet it is also extremely rare. So in most natural gas plays, you'll see if you have helium at all, it's a tiny percentage of your gas stream, less than 1%. But it's actually super important, specifically in cooling superconducting magnets in MRI machines, and in the manufacturing of semiconductors. It has the lowest boiling point of any element, which allows it to reach the temperatures near absolute zero very quickly. And it is also very important because it's used to cool silicon wafers in chip production and is used to fabricate electronics and fiber optic cable, which is currently being very heavily driven by the AI boom. So it's extremely useful, but it's also extremely rare. And if anything has shown us, the current geopolitical climate has really put a spotlight on the fragility of the helium market, with roughly 30 to 40% of the world's production being currently disrupted, causing prices to surge. Now, a little known fact is actually that helium is not traded on the open market. So spot pricing is really difficult to quantify compared to like natural gas or crude oil. Yet we know that supply and demand is going to prevail in this, just like it always does. And we're currently having a significant shortage in supply with an increasing demand again from that AI boom. So helium is the focus of Altura's exploration and production. And on the following slides, I'll kind of dig a little bit deeper into what our forward-looking plans are. All right, so where in the world are we? Altura's assets are in Holbrook Basin in Apache County, Arizona, in the United States. We have over 15,000 acreage within what we're calling our Pinta South Helium field asset. That on this map you can see is broken up into four main projects. We have Saddle Horse Draw, Navajo Springs, 9 Mile, and Puerco Ridge. And if you remember, I talked about most natural gas wells having less than 1% helium, if at all. Our wells actually have 5 to 8% helium concentration, and the rest of which is nitrogen. And that's really important because nitrogen is an inert gas, which means there's very little risk to corrosion in your equipment over the lives of the wells, which is definitely a very, very big selling point for any engineer. The shallowest formation that we have is called the Shinnerup. It's the primary target within Saddle Horse Draw. It is at a depth of less than 1,000 feet. It's actually at about 850 feet. So very inexpensive, relative to other oil and gas plays. However, we know that there are deeper targets as well, and there are stacked sands that go down to about 3,800 feet that we know of, but they have not been sufficiently tested. And in Saddle Horse Draw, we do have 100% working interest, where we also have access to a processing facility. And our focus in 2026 in Saddle Horse Draw specifically is recompleting the existing production to be able to monetize those wells, as they have shown commercial production capabilities in the past. And of that, we are fully funded. So after that, we are working on a new well drilling program in Navajo Springs to the northeast, and then more exploratory play in Puerco Ridge down to the south. So short-term plans specifically in Saddle Horse Draw. So we will be returning 2 wells to production that we successfully recompleted last year. 2 additional wells we just need to run tubing in. They have already demonstrated good pressure and good production. And finally, we have 2 wells that we do need to continue to recomplete and bring back online. And as I said before, all of this is fully funded, and the goal here in Saddle Horse Draw specifically is to maximize our existing production and profitability so that we can then start stepping out either into deeper horizons or more likely drilling a drilling program within Navajo Springs. All right. In Navajo Springs, which is going to be to that northeast there, we have 2 non-operated wells at 20% working interest each. They're located in those sections in blue. And since 2021, they've produced over about $11 million worth of revenue, and are still producing 45 and 60 MCF a day, respectively, with about 7 to 8% helium concentrations. And that's really important because in Navajo Springs, we do see a higher amount of helium concentration. So it is a very prolific area for where we're looking. In the sections that you can see in orange, those are our offsetting acreage, and we do have 100% working interest in those sections, which is really exciting. And that's where our new well program will be focused. The upside here is tremendous. The sections are spaced on 40 acres, so that means 64 wells possible from the primary formation. And that assumes that the wells even drill on a 40-acre spacing. More analysis is definitely needed for that, but it's something that we can keep in the back of our minds that if they don't drill on 40s, we could even drill more wells. However, like I stated before, this area does have stacked pay, so there is opportunity to explore even 2 deeper formations, one of which being the Coconino, and so those will be things that need to be tested as well. All right, so we've talked low risk growth opportunities in proven reservoirs. Let's talk about exploration. So in the southern part of the field is the Puerco Ridge asset that you saw from the previous map. And this slide shows a structure map using the basement. It was generated using some well control and 9 2D seismic lines, and the cooler colors indicate where it's deeper. The warmer colors, I'm sorry, I have that opposite. The cooler colors are where it is more shallow. Nope, I said it right the first time. Cooler colors are lows, warmer colors are highs. So you can see that as we go southeast, there becomes a high, and there is well control that is off the map to the southeast, where we do see that the basement deepens again. And so the question is, where is the rollover? Where is the anticline? So you can see there that we have these dashed ellipses. Our current geologic model is that we think that the dashed ellipses are going to be within that type of structure. That's about 5,000 acres worth in 3 stacked reservoirs. And you can see those lines in pink. Altura intends to shoot approximately 20 linear miles of 2D seismic to confirm and quantify that structure. And that seismic work is also fully funded for 2026. So something that we are definitely going to be doing this year. All right, so told you a little bit about our forward-looking plans. Let's talk structure. Our cap structure is very tight. The last 2 financings have been done with the same firm, using the same shareholders that have continued to support Altura, and we thank them very much for that support. We have 70 million basic shares outstanding with respect to the last 2 financings. That's where you see the largest number of warrants at 25 cents. The majority of these warrants have an accelerator at 75 cents, and the remaining have an accelerator at 32 and a half. And as our stock price goes up and to the right, as you can kind of see here on our little 3-month chart, we get closer and closer to exercising those warrants and bringing in additional capital to advance our operations. So with the renewed kind of global focus on helium, we have seen a considerable uptick in our trading volume, and we expect this trajectory to continue as we continue to execute the development plan that we have in the Pentacell. All right.
Great. Yeah.
And that's kind of what I have for you guys today. So I
Awesome.
just want to say thank you for
Well,
listening.
good job. That could have been your debut presentation as the CEO of Altura, just
It
online.
was my debut presentation.
Yeah.
Thank you.
Yeah, you did great. You did great. I do got a couple questions. One technical here, which I know you'll be able to answer. Are
Let's
these
do
pressure
it.
depletion reservoirs? And do you have any ideas what the decline rates are going to be?
Yes, it is a pressure depletion reservoir. And right now, from what we can see with the 2 non-operated wells, we're at like a 26 to 28% decline. And it's not hyperbolic, it's exponential.
Okay. And the question here from Sean is helium a critical element?
Ooh, is helium a critical element? What do you mean by critical element?
Well, I guess the US puts these certain elements and minerals on like a critical watch list, basically saying these are important for the safety of our nation.
Oh, yes, yes, I see what you mean. I'm like, I went full scientific like table on that. I was just like, well, it's inert and it's a, yeah. Sorry, went engineer brain on you.
Yeah, that's okay. Okay. I guess I have questions a little bit. Is 3D seismic going to help with like defining some of your targets to Porco Ridge?
No, no, we're going with 2D seismic, and the reason for that is really we just need to know if there's a structure. We know from, the geologic models that we do have and well control that there is gas there, and we know that from soil sampling as well, that helium is prolific in this area specifically. We just really kind of need to know if there's an anticline, and it's very, very inexpensive when you think about it. Like it's about on a high end, $400,000 per well to just go pop a hole in the ground, comparatively speaking to what it would cost to do 3D seismic.
Yeah. What is a well cost?
I'm estimating around 400,000, and that's complete logging suite, right? That's all facilities, pipeline to whatever connection we need to make. That's all in.
That's peanuts.
It is very
Yeah.
inexpensive.
Yeah.
Yes.
So what would your priority be? Like Porco Ridge, like for your next exploration wells, right? Because obviously you're tying in Saddle Hills production, just through recompletion and tubing, et cetera, and tying it in online.
Mhm.
So when it comes to your exploration, what would be your priority? Like your Porco Ridge, sorry, you're one of the Navajo Springs, sorry, or your Saddle Ridge or Saddle Hills?
So it's kind of happening at the same time. So we are working on we have acreage in Puerto Ridge. We are working on getting the seismic rights from a land perspective as well in there currently. And then in Navajo Springs, we are working on the surface use agreement for the drilling program that we do intend to start. So they're kind of happening at the same time. Thankfully, they can happen at the same time. Like one does not negate the other.
Okay. Okay.
Yeah.
Okay. Um, so how long is it till you get this production from these recompleted wells, these new tubing wells, Saddle Hills online? Is there anything stopping you from generating revenue today from that?
Yes. So when
Mm,
we originally did the recompletes, we had a really great flow rates. We were producing over 100 MCF a day, exactly what I thought that they were going to do. And I was wondering why nothing was getting to the plant. And so we actually had some holes in our pipeline. And so actually Monday is when we start the dirt work on repairing and replacing the sections of pipeline we need to replace. So
yep.
then from then it'll be 4 to 6 weeks until production comes back online. I have already talked to the rig, the workover rig. We're going to time it all perfectly, to where we recomplete the final 2 wells as we are bringing the pipeline back online. So hopefully it will all be a seamless transition or as seamless as possible.
Yeah. Was refurbishing this pipeline part of your budget when you raised your last
It
part of your
was.
raise? It was?
Yeah.
Okay. So that was
Yeah,
all already taken to into all effect. Okay.
it was.
All right. We're not going to beat a dead horse about conflict over in Middle East because it's horrible. But I guess there's news all over the place,
Yeah.
right? Like I look at news today. Chip makers face helium shortage amid Iran war. Helium shortage has started impacting tech supply chains. And I guess 1/3 of the world's helium production comes from the Middle East.
Yeah.
Like this is a
From,
big
yeah.
problem. Like, do you even know like what you're going to be able to sell this helium for? Because it's a pretty opaque market.
It is a very opaque market. Yeah, it's not something that is spot traded, right? Like you, in the good times of what we have seen, we've seen upwards of 350 to $500 an MCF. In the bad times, we've seen $150 an MCF, right? I I would expect that you are going to be above $500 an MCF.
And do you think the damage caused over there is like long-term damage? Like
It
with
will at least be long to midterm, right? So from the articles that I've read, it will take at least 6 to 8 weeks for them to even continue to bring the plants back online, assuming the plants are not destroyed.
yeah, like I guess that's my question. It's like if infrastructure destroyed, that's the big long-term issue, right?
Correct.
And I guess that ultimately this really just kind of goes to show how fragile this market is. So how much
Very.
helium production is coming out of the States? Like, and what other basins in the States are producing helium?
Oh, 40% is coming out of the States. And we have there are other fields in Arizona, which is very interesting because Arizona doesn't have a lot of like oil and gas from a like historic trend, but they do have a lot of helium. There's some in Colorado, and then there's some people in um, Minnesota that are also
Yeah.
trying to produce helium, I should say.
We got a question here from the audience. What is the
Mhm.
typical cost of production? We don't know what you're going to be selling it for quite yet. But what is your cost of production? Do you know that?
So to drill a new well, like I said, is about $400,000 or so. From a like operational expense, it's very inexpensive. So it's a couple $1,000s a month in operational expenses, and most of that is just going to your lease operator. There's not like chemical charges because again, it is helium and nitrogen.
Hmm.
There's nothing to pump in there. You don't have, issues with corrosion that you would have to put chemicals in or anything like that. It's really, I mean, for lack of a better term, it's really basic, which is means very inexpensive.
Cool. That's what wraps it up, Ashley.
Okay,
Congratulations on being appointed as CEO. I think
thank
you're
you.
extremely qualified for this job. And I know that you got some really strong financial backers out of Vancouver here that will support you. So yeah, here's your opportunity. Grab it by the balls and off you go. Thank
All
you,
right.
Ashley.
Thank you so much.
Yeah.